We've all felt it. The pull of a hot stock, the buzz of a friend's tip, the headlines about overnight millionaires. The excitement is real, and so is the fear of missing out. You see the charts, imagine the possibilities, and it feels so close. This is the siren song of the market: quick riches, effortless success. But after the thrill, reality hits. You buy in, feel like a genius for a moment, then the music stops. The stock drops and you're left with regret and doubt. It's not just about losing money, it's about losing confidence. Many new investors learn the hard way. Chasing trends is a painful introduction to the market. The market doesn't reward speed, it rewards wisdom. The most exciting stories rarely lead to lasting wealth. The loudest companies aren't always the strongest. Chasing hot stocks is like trying to catch lightning in a bottle. Exhilarating, but usually fruitless. So what's the better question? Not how do I get rich quick, but how do I build wealth reliably? This shift moves us from speculation to ownership. It's about looking past the noise and focusing on what endures. The journey starts not with a tip, but with a powerful idea: owning pieces of truly great businesses. This is the foundation of quality investing. Imagine two builders. One rushes with cheap materials, the other works slowly, choosing the best. The first house looks good from afar, but up close it's fragile. The second house is solid, built to last. Quality investing is being the second builder. It's about buying and holding exceptional companies for the long term. This is the approach of legends like Warren Buffett and Charlie Munger. They didn't chase fads. They found businesses with durable advantages. Think of it as owning the racetrack, not betting on the horses. A great business produces great returns over time. Daily market noise is just that, noise. What matters is a company's ability to grow profits and reinvest wisely. Quality investors act like business analysts, not traders. They focus on the next decade, not the next week. When you buy a high-quality company, you become a part owner in something resilient and essential. This isn't a get-rich-quick scheme, it's a get-wealthy-slowly plan. What makes a business truly high quality? It's not popularity, it's durability and profitability through all cycles. Take Coca-Cola, a simple product, a global brand, a moat competitors can't cross. Contrast that with companies in cutthroat industries, reliant on trends or debt, fragile, speculative bets. Quality businesses are built for imperfection. They have the strength to weather storms and emerge stronger. Microsoft, once doubted, reinvented itself thanks to its core strengths. That's the power of quality resilience and adaptability. A quality business is easy to understand and trust. Its products are everywhere, its services essential. It earns high returns, avoids excessive debt, and is run by owner-minded managers. These aren't flashy traits, they're the pillars of long-term value. For patient investors, boring is beautiful. That's the secret to lasting success. What are the 5 pillars of a quality business? First, a durable competitive advantage, a moat, like Apple's brand or Visa's network. Second, consistent and growing earnings, steady, predictable profits. Third, a fortress-like balance sheet, low debt, strong cash flow. Fourth, competent, shareholder-friendly management, leaders who think like owners. Fifth, prudent capital allocation, reinvesting wisely, buying back shares, rewarding shareholders. These pillars protect a business through good times and bad. They allow it to compound value for decades. When you find these traits, you've found a business worth owning. Focus on these fundamentals, and you'll avoid most investing mistakes. That's the blueprint for enduring value. Spotting quality companies is detective work, not guesswork. Start with the income statement. Look for rising revenue and stable, high-profit margins. This signals pricing power and a strong moat. Next, check the balance sheet. Low debt, plenty of cash, and financial strength. A strong balance sheet means freedom and resilience. The cash flow statement is crucial. Positive free cash flow is the lifeblood of a healthy business. Cash can't be faked. It funds growth, dividends, and buybacks. Beyond numbers, read the CEO's letter. Do they speak honestly and have a clear vision? Can you explain how the company makes money in simple terms? Will people still need its products in 10 years? If you can answer yes, you're on the right track. The best investments are simple, understandable businesses. That's where quality hides in plain sight. After buying a great business, the hardest part is waiting. Our instincts push us to act, but real wealth comes from holding. Compounding is the silent force that turns good businesses into life-changing investments. Take Johnson & Johnson, decades of steady growth, reinvested profits, and patient shareholders. The snowball effect needs time to work. The market will test your patience with downturns and crashes. The temptation to sell will be strong. But a quality investor knows a falling stock price doesn't mean a failing business. Downturns are often the best times to buy more. Discipline bridges your goals and results. Stick to your strategy, ignore the noise, and think in decades. Trust the process and the power of compounding. Time is the friend of great businesses, and your greatest ally. Embrace it and let it work for you. That's how wealth is truly built. Even quality investors face traps. The first is overpaying. Even the best business is a bad investment at the wrong price. Buy quality at a fair or discounted price. Next is style drift. Don't abandon your principles when others chase fads. Write down your criteria and stick to them. Another trap, blindly copying others, even great investors. Do your own research. Conviction must come from understanding. If you don't know why you own something, you'll panic when it drops. Finally, beware analysis paralysis. Waiting for perfection means never starting. You don't need the perfect company or timing. Build a diversified portfolio of high-quality businesses over time. Start small, learn as you go. The most important step is to begin. Don't let the perfect be the enemy of the good. Building lasting wealth isn't a secret or a privilege, it's a choice. Stop chasing trends. Start thinking like a business owner. Quality investing is about discipline, patience, and owning great companies for the long haul. Aim to own businesses you'd keep even if the market closed for a decade. Start today, no matter how small. Make saving and investing a habit. Read, learn, and study the greats. Be patient with yourself. Mistakes are part of the journey. Stay calm during market dips. Remember, you own real businesses. This is your invitation to a more secure future. Quality investing is a philosophy for building a better life, one great business at a time. The power to build wealth is in your hands. Begin your journey, focus on quality, and let compounding do the rest.